Hello there. I want to talk about a subject today, what I've sort of passed on, touched on in passing in a few videos, and it's something what I ain't really covered off in detail, and that is what in particular to trade. Um, so I'm going to start by talking just briefly about what sort of thing there is out there to trade, and then talk about why I personally trade stocks. So let's get going with what is there to trade out there, and these are the main ones. There are a few others, more exotic stuff, but these are the main things what you can trade. Got futures, Forex or foreign currency, options, and stocks. So each of those have got some advantages and disadvantages. Let's have a quick look at an overview of the advantages of each of those. First off, futures. I know they're very popular. One of the reasons they're popular is that they're quite cheap to get started with. You can open an account with not a lot of cash, and there ain't really any restrictions on trading them. So quite cheap to get going with, and that's one of the reasons why they're so popular. Another reason they're popular is that you can trade on quite high margin, so you can buy and sell more than what you've got cash in your account. That's effectively what margin is. It's your brokers lending you the money. Now, high margin can be a good thing and a bad thing. It's a good thing in that it allows you to make more profit than if you couldn't trade on margin because you can buy more stuff. It's a bad thing because obviously you can lose more money as well, and in fact you can lose more money than what you got in your account. So in some ways, margin is a very bad thing. Good for people what are profitable and know what they're doing, and bad in some ways for beginners because it's very tempting to try and gear up your trading and make a lot of cash, and people do that and end up losing an awful lot. Another disadvantage, or rather, of futures is that it's a relatively small universe, and by that I mean there ain't an awful lot of them to trade, and we'll have a look at it in a minute at why that's important. And finally, it's quite difficult with futures to start small. You've got a minimum you can trade of one contract at a time, and typically a contract can be worth anywhere around $10 per tick, which means that the minimum rather, what you can make or lose on a single tick is $10. Some of them are a little bit less than that, some of them more than that, up to $25 or even more. So it means you can't get started small. You're straight in there trading for relatively big money. All right, next up, Forex, foreign exchange. This is even cheaper to get started with than futures. Awful lot of discount brokers out there that will let you open an account for next to nothing. Uh, Very long trading hours. Forex trades all day during the week, so it's open all night. So for people who work during the day, it can be a good option. You can come home whatever time you come home. You've got a market, Forex market, was open, and potentially in trade. Sounds great in theory. Trouble is, of course, that the all the action actually happens. There's about 3 different periods each day when the action happens, and that's when New York, Hong Kong, and London all open. So although the market might be open all night, don't necessarily mean that there's going to be anything going on that's worth trading. But that's one of the reasons why it's popular. People just assume that open all night, brilliant, I can make money all night. There is an issue in that there ain't really any central regulated exchange for Forex. You trade through market makers, banks, whatever, and they make their own prices. So it's not like a stock exchange where there's just one price and whatever price is available at the time, that's the price for everybody. At Forex, you could have one market maker offering you one price and another market maker offering a completely different price. Of course, you can only trade with the one where your account is held, and if they decide to start playing silly buggers and messing around, then there ain't nothing you can do about that. Don't. I'm not saying that that happens, but it's something to bear in mind. Is that it's a far less regulated market than the other markets. Even higher margin than futures up to 200 to 1 in some cases. So if you can afford to buy one contract, effectively your broker will let you trade up to 200. That's a very simplified way of looking at it, but that's essentially what it means. And for the reasons what I stated before, that can be a good thing and a bad thing. You can make an awful lot of money, you can lose an awful lot of money. There's an old saying about trading that amateur traders think about how much they can make, while professional traders think about how much they can lose, and that's very true. Okay, one other point on this Forex is, again, quite a small effective universe. Although there are quite a lot of currency pairs, there's only a few what are actually worth trading. Okay, options. All sorts of possible strategies. You can do some really fantastically complicated stuff with options, so that makes them very flexible. Also makes them much harder to get started, because it's not just a case of buying and selling with options. It's a bit more complicated than that. So if you're just getting started with trading, not really ideal, not an ideal place to get started in my view. Also much less suited to day trading. Option strategies tend to be for longer periods of time, swing trading and longer trading strategies. And as this is all about day trading, that pretty much means that options are out of the picture. On the other hand, they do have a very large universe, lots of them around, so a lot of trades available. And last but by no means least, stocks. And the main thing about stocks is that there are literally thousands of them to choose from. Very big universe, and again, we'll see why that's very important in a second. They're also much easier to trade for reasons which I'll come on to. On the downside, or the upside, depending on how you look at it, much lower margins, typically only 4 to 1 on US stocks. So it means you've got to have more money in your account to make more money. On the other hand, you're limited in how much you can lose to much more reasonable amounts. So very good for beginners. And they're also, unlike futures, very highly granular. You can start out by just buying and selling 100 shares at a time, and if you're trading American shares at 100 shares, that means that every 1 cent move in the share price is worth $1, as opposed to 1 tick move in the futures being worth probably $10 or more. So you can get started trading with real cash. And if you remember back to the paper trading video, I talked about getting started with very small amounts. You can do that with stocks very easily, which is something you can't necessarily do with the other instruments. Okay,